Good afternoon, everybody. We're going to get this Issues and Ideas Forum started. Welcome to everyone who's here. My name is Michael Van Beek. I'm the Director of Research at the Mackinac Center. We hold these forums on a regular basis, and we thank you for coming out. Before we get started, I have a couple things I want to take care of. First is one special guest I want to make note of is Joe Olson, who's over here at this table. Joe is the former insurance commissioner of Michigan, so we might get some tough questions later from him after the presentation, but also is a founding board member of the Mackinac Center. So thank you, Joe, for being here. Welcome. Also, I want to welcome anyone viewing the live stream. This is being streamed online, and this is being recorded as well. So if you want to share it with a friend afterwards or go back and look at the presentation, you can do that at our website, mackinac.org. Also, you may have noticed on your way in, there's a publications table in the back. The Mackinac Center does research on a wide variety of issues: fiscal policy, education, labor, criminal justice reform, environmental policy, and we've got samples of some of the research that we've done on those issues at the back. So if any of those things interest you, feel free to peruse the table and take what you want. And then finally, at the end of the presentation, we'll have time for question and answer. And the way that we operate that for the benefit of the live stream and for the recording is we'll have you write down questions on note cards at your table. So there should be pens and note cards at your table. So if you have a question during the presentation you'd like to ask, just jot it down in the note card, and then one of my colleagues will come and pick that up from you, and then I'll be able to ask the question from the podium so everybody can hear. Okay, to today's topic, the price of auto insurance. How does Michigan's auto insurance compare to that of other states? Why is insurance most expensive in places like Detroit? What fiscal impact does this have on the average household and on the low-income household in Michigan? Well, a recent report done by Poverty Solutions at the University of Michigan called Auto Insurance and Economic Mobility in Michigan, A Cycle of Poverty, addressed these questions and many more, and that's what we're going to hear about today. But before we do that, you may have heard that there's been some significant changes to the way auto insurance works in Michigan, and that are going to come online next year. And so before we start, I wanted to give a brief overview of what those changes will mean. I'm going to try to do this quickly. I'm not going to catch everything or describe everything, but I'll do my best to summarize it in a short amount of time. I think there are 5 main elements of the reform that are very important. And the first is what we call PIP choice. So PIP is personal injury protection. That's the medical coverage that all drivers are required to purchase as part of their auto insurance policy. Starting next year, drivers will have a choice over how much PIP coverage they want. So drivers can choose $250,000, $500,000, or the previous standard in unlimited amount of PIP coverage. In addition to that, drivers who have health insurance coverage through some other insurance program, so like employer-provided private insurance or through Medicare, those drivers would be able to opt out of medical coverage altogether as part of their auto insurance policy. So no, they would not have to purchase PIP coverage. And then one other wrinkle to that PIP choice element is the fact that if you are people who are on Medicaid, they can choose to purchase PIP coverage of only $50,000. That's the lowest level that they would be able to choose. And then I should also mention every driver has to pay the Michigan Catastrophic Claim Association fee. That's going to be increased to, I think, $200 this year. If a driver in the future chooses a limited PIP coverage, they will not have to pay that full MCCA fee. The best estimates I've seen are that it will be about $40 rather than the $200. Another key element of the reforms that passed are mandatory premium reductions that are applied to insurers. So people who choose a lower level coverage of PIP will have to have their premiums reduced by a certain amount. So people who are eligible for Medicaid and choose the $50,000 PIP coverage, their premium will have to be reduced by 45%. Those choosing the $250,000 option will have their premium reduced by 35%, and then $500,000 reduced by 20%. And then even people who choose the unlimited PIP still, their premium will have to be reduced by 10% as well. And then, of course, if you choose to have no medical coverage, no PIP coverage, then your premium will be reduced to zero because you won't have any PIP coverage at all. And those mandatory reductions in premiums are requirements until 2028. The third element of the bill that was important is it created restrictions on what factors insurers could use to set premium prices. Insurers have been prohibited from using gender and marital status, but in addition to these now, they cannot use home ownership, education level, occupation, the zip code where you live, or your credit score. It's really hard to predict what kind of impact this is going to have. It's really kind of unprecedented nationally. It's really by far the most restrictive ratings or restrictions on factors that insurers use for ratings that I've found in the country. So we'll just have to wait to see what the impact of that will be. The fourth element is what's called a fee schedule, and that's really not well named because it's really more of a limit on the reimbursement rate that insurers will have to provide to hospitals and to medical providers who provide services to people injured in auto accidents. So this is probably the most complicated part of the bill, so I will do it as simply as I can. By 2023, insurers will have to pay, the limit will be 190% of Medicare's reimbursement limits. And then for certain facilities, it will be 220% of Medicare's reimbursement limits. And then for certain other group of facilities, trauma centers, it will be 230% of Medicare. That will gradually work its way in the coming years. And then the fifth and last big element of the reforms that passed are kind of put under an umbrella of anti-fraud efforts. So, and this is kind of applies to almost all the players in the system. So insurers have some, and medical providers have some. So there will be a utilization review that medical providers will have to report certain information to the state on who they served, what they charged, what services they provided. Then there are the Michigan Catastrophic Claims Association. They are going to be subject to independent audits. They will have to provide automatic rebates when their investments or when their assets exceed their liabilities by a certain amount. And then they will also be subject to public financial disclosure requirements. And then finally, there will be a dedicated anti-fraud unit also created in the state that will be charged with investigating fraud, trying to accept reports on different fraudulent activity throughout the entire insurance system. So that is a very quick overview. I didn't describe everything that's in the bill, and there may very well be other important things as well, but maybe we can get into some of those issues in the Q&A or in the presentation. So let me introduce our presenter now. It is Joshua Rivera. He is a data and policy advisor at Poverty Solutions, where he provides data analysis, policy research, and program implementation assistance to City of Detroit partners. Prior to working at Poverty Solutions, he was a duly appointed fellow at the Mayor's Office, City of Chicago, and Education Pioneers, where he worked on evaluating and improving workforce development and education initiatives. Josh currently sits on several boards of nonprofit organizations in Detroit, and he's been published in the New York Times, cited in the Washington Post, The Economist, and Slate. And Josh got his bachelor's degree in economics and political science from Southern Illinois University and has a master's in public policy from U of M's Gerald R. Ford School of Public Policy. So welcome, Josh.
Hello, everybody. I always enjoy speaking when people are eating, which means as bad as I do, you will still leave not hungry. Thank you so much, Michael, and thank you so much to the Mackinac Policy Center. When we had first written this brief, I received a kind email from Michael kind of saying, here's the things I like, here are the things that maybe you need to think about more. And I really thought that it was one of the best policy engagements that we have received and exemplifies, I think, what institutions that are engaged in the public debate should do. So I'm very privileged to speak with you all. And this is an issue that's personal to all of us. Next year, we're going to pay again for our auto insurance premiums, and we're going to see changes that we're going to want to understand. For some of us, rates might increase. Majority of us, rates will likely decrease. Some might stay the same. And so what I hope this presentation does is a couple things. The first is answers the question, why did this matter to an organization whose job it is to think about poverty solutions? And the second is to gauge with you all on the question of, okay, what happens next? And as I was writing this report, it became a bit personal because I got in a car accident at the beginning of this year. It's on East Jefferson. I live in Detroit, the city where year after year the highest insurance premiums in the world would be at the top of an article. I get in an accident right on this busy street, your Monday morning commute. Guy hit me from the side. I happen to be, thank God, next to a Tim Hortons, and so there's a cop in the parking lot. The cop's asleep. I knock on the thing. I'm like, hey, there's a car accident. He's like, oh yeah, it looks like it. And I'm like, great, buddy, come on, help me out. And from the distance, I hear the other driver yelling, guttural, scared voice, yelling. I turn around. He's got his daughter with him. I'm thinking, oh, God. Then I'm like, wait, they seem okay. What is he yelling? He's saying, my deductibles, my deductibles, my deductibles. And I thought, okay, yeah, we really need to write about this issue, right? That you would get in a car accident with your kid and the first thing you think of is your rates. That shows to me at least the psychology of what the status quo looked like, what we called a fundamentally broken and unsustainable system. And for the 34.5% of Detroiters who live under the poverty line, and for the many millions of Michiganders who struggle with being working poor, it mattered a lot. So this presentation, we come from an academic institution, but I hope it's not stuffy. Feel free to engage with questions afterward. But I'm going to walk you through a little bit of our thinking and how somebody who came from Chicago working on workforce ended up doing auto insurance is one of our big policy issues. So, pop quiz, because I do come from university. I want you all to just think to yourself at your tables, just maybe get a little competition with your colleagues. What do you think is the average annual cost of auto insurance in the United States? I'll give you 10 seconds to reflect. Anybody think they got it? Did you tell a colleague? You told at least one person? Who was close? What'd you say? Good. So across the country, on average, auto insurance is about $1,400 a year, or about $119 a month. Anybody paying around that now? No? Maybe some people in the back, people are going, what, really? Whew. I wish, huh? All right, next question. What's the average auto insurance cost in Michigan yearly? Give you another 10 seconds. Think about your bill. All right, you got your guesses? Let's look at this. We have the U.S. On this chart, there's 3 bars. To your far left is the United States. It's the one that's lowest. So in the U.S., as we said, average auto insurance premiums are $1,427. Now move up. The bar in the middle, across Michigan, average annual insurance is $2,610. All right, you ready to move up? In Detroit, where I live, average annual premiums are $5,414. Now, I'm a skeptic. my job is inherently to question the numbers. And so I went around and I started asking our workforce organizations, the people who interact with the folks who are looking for jobs, and I say, hey, why don't you go find me a couple bills? The car insurance bills is what people are saying. And it was spot on. Single mom in a workforce program paying more for her auto insurance than her car note. Guy trying to get a job to age 25, wants to go back to school, looked at the auto insurance bill and he said, I gotta pay for my baby's diapers. The kinds of trade-offs that we were forcing folks to make, and you can see that we're just out of line with the 49 other states across the country. So there had to be something here. And $5,000, our institution really focuses on the lives of the working poor and poverty in Michigan. I don't care how much you make. I don't care if you're making Whitmer's salary or the salary of the staff at this hotel. That's a lot of money a year for anybody across the state. So, but how do we know if it's affordable, right? There's lots of numbers that are put out in the debate, but how can you, as a consumer of what's happening, give a good gauge of what's affordable for you? So the answer to this is after the Great Recession, one of the little baby pieces of legislation that came out mandated that there be a report done across the country by a new entity called the Federal Insurance Office. This Federal Insurance Offices, their job is really just to do research. They don't have a lot of authority over auto insurance because it's a state issue, but they can issue reports. And what they did was they said, let's look at how much people are spending all across the country. And what they found is if you look at consumption data, that people on average pay about 2% of their income a year on auto insurance. 2%, that's not too bad. I probably spend 2% of my income or more a year on coffee, right? So, you can make a comparison. So the Treasury looked at this data and said, all right, it's unaffordable if you pay more than 2%. So if in a given area, the rates that folks are paying are more than 2% of their income, we're going to consider it unaffordable. Does that make sense to everybody? So let's keep that 2% number in the back of our mind. Spoiler alert, we're not close. So I asked myself, all right, how am I doing in Detroit? This table, I'm going to walk you through it, so don't feel free like you need to get it all at once. The top, what we have here is you have the city at the far left, and I picked these cities from a Detroit Chamber report. The Chamber in Detroit said, these are cities that we either want to be like or we think they're peers. So I said, all right, I want to get the business group's perspective on who we're competing with. So I got Detroit, I got Cleveland, St. Louis, Pittsburgh, Atlanta, Chicago, Minneapolis, Boston, and Seattle. A good section of the country, plus the national rate. I have your average auto insurance premium, your median household income, so median is what the typical family is making in a given area. And then car insurance is a percent of pre-tax income. So you remember that 2% number. In Detroit, folks are paying 18%. 18%? The federal government says that you should only be spending 30% of your income on rent, right? Putting a roof over your head should be around 30%. And yet folks in the city, and this is just typical income, are paying $30,000. Well, then people, they say, Josh, but Detroit's unique. Detroit's had some problems. There's a lot of poverty in Detroit. And I said, all right, well, let's look at Cleveland. Cleveland is a city that has lower income than Detroit. Folks are doing worse off economically, and look at Cleveland. Their rates a year, $1,277. Crime, not that different. Demographics, they're pretty similar. Poverty rate, similar. The difference was in the auto insurance. In Cleveland, they're paying 4%. Still not affordable, but extremely close. And now let's look at places like Chicago, where I'm from, 3%, or nationally, 2%. So the biggest city in our state has completely unaffordable auto insurance. Let's see what else. But then I started asking myself, I've done lots of work in rural Michigan. I've done lots of work in different parts of the state. And everywhere I go, people still complain about auto insurance. It doesn't feel to me like this is just a Detroit issue. And so I gathered data. Who here has gone shopping for insurance online? Right? You go online, they'll give you those websites that kind of compare rates. Here's Allstate, here's Geico. I reached out to one of the big aggregators of this data. They collect auto insurance rates from every other company by zip code, and I said, let's share the data so I can make this map. Here's what I did. That same 2% threshold, I calculated it for every zip code in the state. And you can go online right now, plug in your zip code, and look at how much average auto insurance rates are for you. Let me walk through the colors here. That red that you find in the middle of Detroit, that means car insurance rates are 24% to 36% of income. 36%. It's a little close to where I live, the orange, 12 to 24% of income. But let's look across the state. Here's a question for you. Tell me if you can find green, the color green on this map. Anybody see kind of little splotches of it? That's the only affordable zip codes in the state. Green equals affordable. Every other color is unaffordable. You see that dark blue that cuts through Michigan, kind of right down in the middle, branches out from southeast Michigan? That's 2 to 4%. That light blue that's hitting up our neighbors up north and just kind of circles around the Upper Peninsula, that's 4 to 8%. And I really want to think about that light blue, because when we think about rural Michigan, we have to remember the cost that those folks face. The roads are often in more disrepair, so they get a lot more cost in terms of changing their tires, and the jobs are farther away, so they have a lot more cost in terms of gas and just getting to work. You add on top of that this huge auto insurance cost throughout the state, and to me it showed that everybody's affected throughout the state of Michigan through these high auto insurance costs. Of course, in our cities that have the highest poverty rates, we ended up in this weird dynamic. You know, I used to live in Ann Arbor. Ann Arbor's a pretty affluent city. Folks there got university jobs. People are making, on average, about $100,000 a year. Their insurance is cheaper than in a city like Detroit, where people are only making around $30K. Now think about just trying to get people to work. If you want to motivate families to get to work, if you make it practically illegal to do that, that's going to have big implications. Now, a big part of the debate that has been discussed in Lansing is this question around the interaction of these costs with race. And so what we did was we said, all right, we'll take all of our majority minority zip codes, we'll take all of our majority white zip codes. And on this scatter plot, on the one axis, you have your average car insurance premium, and on the other axis, you have median household income. The pink line is zip codes where the median income is at the poverty level. So for a family of 4, that's around $24,000. I want you to look at that pink line regardless of race. The lowest dollar amount on average auto insurance is $2,000. What's 2% of about $24K? $515. So no matter where you live in Michigan, whether you're a poor white zip code, whether you're a poor black zip code, nobody was winning. Nobody could get under that $2,000 line when it came to average auto insurance rates. We couldn't even hit 1,000, which meant that for our working poor families across the state, no matter your color of your skin or the race of your community, there was no auto insurance policy that was affordable to a family at the federal poverty level. Which in a state like Michigan, what do we want folks who are within poverty to do? Go find a good job. It's real hard to go find that job when you're driving illegally and you're worried about getting to work, don't want to get stopped. Now, we also at our center, we run surveys. And so we asked people, when's the last time that you had to miss an appointment because you didn't have a means to get there? A critical appointment, work, doctor, getting to college. The far left bar here is those without a vehicle, and this is the Detroit metro area. So 43% of those who don't have a car reported having to miss a critical appointment. Even those with a vehicle, about 14%. And those, about a quarter overall in the city. A quarter of the Motor City residents having to miss an appointment because they can't get there. That impacts the ability for employers to get their employees and for folks to get to their critical necessities. Now, another piece of this is not just that we can't get to work, but that folks do what you might hear called driving dirty, uninsured drivers. Because we know that there's very few that's going to get in the way of a parent needing to go feed their kids, right? They're going to get in the car, they're going to get to work regardless. And so we can see here that Michigan joined the ranks of a super group that we do not want to be a part of, states with the most uninsured drivers. So the only people that are beating us are Florida, Mississippi, and New Mexico. We can thank them. But Michigan ranks 4th in the nation for uninsured drivers according to the Insurance Research Council. Across the state, and this is how I know it's not a Detroit issue alone, 20% of drivers. I want you to count every 10 cars when you're on the road going back home today. 2 of them likely don't have insurance. And in Detroit, where I live, that number is 60%. 60% of drivers on the road, estimated, have no car insurance. So when they get in an accident, that wonderful personal injury protection system that was defended for a long time, that didn't kick in. It didn't exist for a lot of my neighbors. But then there's also driving uninsured and paying. So one issue that the legislature has been working on together is this question of criminal justice. Now, for a family who needs to go to work, if you get stopped and you get a ticket for not having a license or your insurance, what are you going to do the next day? You need to get to court. How are you going to get there? Via our great public transit system? Probably not. Get in the car, you drive to get to court. And report after report says this is how the cycle of poverty begins. It's that first ticket that you can't pay, so you push it off. Debt accumulates on that ticket. You get stopped again. Another ticket arises. So you try to get the insurance because now you're scared. You can't afford the insurance. That cycle perpetuates itself for so many Michiganders across the state. There's wonderful work being done here about previous driver responsibility fees. And so now we can kind of see how the state's actions to sort of do good ended up doing a tremendous amount of harm to people who otherwise would have good intentions. But finally, for us, the budget trade-offs. $5,000 a year is a cost that most people would rather spend on their kids. In fact, we were just interviewed by WXYZ in Detroit, and this wonderful woman was interviewed after me, and they told her, well, are you paying for insurance? She said, no, why not? I got baby diapers. Diapers are expensive. I got treatments for the kids. And so in effect, we were forcing people to pay for a system that they would have preferred not to if given the freedom to pay for other options via more affordable options. So let's step back and kind of walk through how we got here. You're going to see a lot of reports in the coming days analyzing the piece of legislation that just passed, the piece of bipartisan legislation, and it's important to know what were the 2 big beasts I thought that we needed to tackle. And we wrote in our report really 3 main components to why the system was the way it was. The first was we had unsustainable levels of personal injury protection. Here's the way it's simple. Michigan had you paying for gold standard health care and auto insurance in the same. Many people paying double for health care that they could receive in their health insurance coverage. So we were the only state that had unlimited personal injury protection. The next highest state was around $40,000 of personal injury protection. Because we guaranteed that benefits to injured drivers, it attracted fraud, unfortunately, litigation, and it increased the health care bills for people all across the state. And finally, insurance companies have to account for making these payments. One of the biggest misnomers I see in this debate is that we paid for all of this medical care just via that fee. Everybody knows that yearly fee they add onto your bill? That pays for an amount above around $500,000. But everything up into that, the insurers have to cover. And so they adjust your premiums to correspond with that risk that you will call up those claims. And of course, because your healthcare company knows that you're paying double, you'll often, when you first sign up for health insurance, they say, hey, if you get in an accident, go to the insurance company first. Don't call us up. And so they can keep their rates low by pushing those costs onto a system. And why is auto insurance so bad at doing this? They don't have the expertise in healthcare. They couldn't negotiate. They don't have the expertise to be able to set prices, to be able to compete. And so they often just paid whatever they had to pay. But there's really 2 questions here. there's why are rates just so high overall, but then why are rates so different between people? You know, I had a lot of our faculty at the University of Michigan retire, and they said, oh, I'm ready to retire, get on the road, get out of here. Their rates increased. Why? Same driver, same person, just hit 65. The reason that we say that rates differ between people were the use of these non-driving factors to determine your rates. Michigan, before, allowed for there to be the use of things that correlate with your income. So for example, I graduated from the Ford School of Public Policy. The moment I got my master's degree, my car insurance rates decreased. I got a pretty decent job at the University of Michigan. The moment I signed up for that job and got that check, my rates decreased. But for my colleague or my neighbor in Detroit, if they lost their job or they saw a loss in income, their rates could increase. If they didn't get as good an education as I did, like a lot of my neighbors back at home in Chicago, their rates were higher. So there was a perverse regressive incentive where the folks who needed the most affordable insurance actually paid the most. Our rural drivers paid more, our drivers with less than a college degree paid more. And so for some of us, we might think, I kind of like those discounts, right? Like, I like getting my University of Michigan guaranteed reduction, but we really had to think about everybody else and the effect that that would have on families who need that affordable insurance the most. And so in Detroit, that mattered. Why? Poverty is really concentrated in Detroit, 34.5% poverty rate. And so a lot of those folks with lower education, lower credit scores, they're concentrated in that city. And when you concentrate them in a city, the costs are going to drive up for the entire town. But also, Detroit's the most populous city. It has the biggest population. So it's very simple here. You got more people, more car accidents, more claims. And a lot of people travel into Detroit for work. A lot of people don't live in Detroit but travel into Detroit for work. And so that traffic flow also increased the rates. Finally, there is systemic abuse throughout the system. Anytime you offer a golden egg like that, there's going to be people who exploit it. And so time and time again, you saw ambulance chasing. In fact, I think there was a Super Bowl commercial making fun of this, which I was the only person at the Super Bowl party who was mad. Everybody else thought it was funny. There's a lack of fee schedules, as Michael talked about. Now, why does this matter? Because fee schedules are the name of the game in a lot of other aspects of the healthcare system. If you got injured at work, your workers' compensation negotiates with your insurance company and says, no, no, no. You want to charge this for an x-ray? That's crazy. That's way too high. And in hospital systems, this matters. Because who's ever tried to find out the price of something that they got at a hospital? You ever looked at the Band-Aid receipt? And somehow the price of a Band-Aid at the hospital costs 3 times more than it does at CVS? That lack of transparency, open area for abuse by hospitals to make more money off of the auto insurance system because they could. Fee schedules help balance that out and equalize that market. And finally, fraud. Just fraud of the system. Folks who abused it, lots of news articles about entities who thrived off of making fraudulent claims. So, what can we do? In a city like Detroit, we asked them. We said, all right, auto insurance rates are high, but we don't know what people's policy priorities are. So we said, here are a whole bunch of policy issues. We asked people with a car, and we asked people without a car. And here's how we knew this was the top issue, at least for the Detroit metro area. You see that orange bar? The orange bar is the opinion of people who don't have a car. Their top policy preference, 42% of people who don't even have a car said, my number one issue is getting auto insurance reduced. 61% for people overall. The next best thing, adding more public transportation, got only 32% support from those without a car, and only 27% amongst drivers, which to me showed that at least amongst Detroit residents who were perhaps the most disproportionately affected, this above all was the thing that they wanted done. And so as the debate continues in Lansing, the advice that I've given to policymakers is hold people accountable. And as we say, as my business colleagues would say, what gets measured gets managed. We need to continually look at the progress of auto insurance reform and remember that policymaking is not about one-offs. It's about a continuous process of improvement. There are going to be unintended consequences. There are going to be opportunity costs. And so what we at Poverty Solutions hope to do is work with folks like you and folks in Lansing to make sure that whatever comes next, we're always looking for the goal of how can we make sure that we have a system that's affordable and that offers economic opportunity to families across the state. That is the end of the presentation. I am very much looking forward to questions from you all.
right, thank you, Joshua. Now, if you wrote down a question, one of my colleagues will come along, Holly right there, and collect it from you. While she's doing that, I'll ask one or two of my own. Josh, one of the things that I've read after the Senate Bill 1 was passed and signed by Governor Whitmer, I think just last week, I've read some people raise a lot of concern, skepticism about whether or not people will actually save money with this. They've cited, there's too many loopholes in the legislation, too many ways insurers will get around not having to actually reduce rates very much. What's your take on that? Are you optimistic? What's your opinion?
I'm extremely optimistic. Here's what I'll say. Anytime we start policymaking with the idea of a guarantee, we need to be humble, right? The best that we can do is push ourselves in the direction of evidence-based policymaking. And this bill confronts what were the biggest cost drivers, along with guaranteeing some form of reduction on PIP. And so I think all we have to do is look to our neighboring states, Ohio, Illinois, let's look at Iowa. All of those states have significantly lower auto insurance premiums. Why? Because they did the things that this bill is doing now. I think we could probably go further, but I do think that, and we're going to monitor this, we're going to make sure we're looking at auto insurance prices every year from now on. You're going to see reductions in rates for a majority of Michiganders.
The other thing that I've noticed, obviously, Michigan has a no-fault system, which is in many ways much more complicated than what that sounds like. But one of the things I've noticed in recent years is it seems like there's an increase, at least in the commercialization or marketing for attorneys to file lawsuit on behalf of people who are injured in auto accidents. And if you're familiar with the concept of how a no-fault system works, it's supposed to be that there's not much of that kind of those lawsuits happening. Can you comment on that? Is that how is that developed? And is it the case that there are more lawsuits that are being filed as a result of auto accidents?
It shows that the very purpose of no fault ended up not being accomplished by Michigan's reform. So a little history here. In the 1970s, there was this big push. If you go across in Illinois, there's what's called a tort system. In a tort system, you have to sue after a vehicle accident. You don't have the no fault. And in the 1970s, a whole cadre of states said, we don't like the tort system. There's too many lawsuits. Let's switch over to no fault. For many of the states that switched over, within 5 years, a vast majority had said, nope, we can't do that. Why? They saw actually prices increase after the adoption of no fault. States like Colorado completely reversed course and said the just increase in auto insurance premiums is too great. Michigan was one of the loners. Now there's only 12 states that have a no-fault system. And we were an extreme loner in that we had unlimited personal injury protection. And I think it was the combination of us remaining in a no-fault system, along with unlimited personal injury protection, that created new methods for scrupulous lawyers, scrupulous interest groups, to take advantage of that system. And I think what we're realizing now is that there was, unfortunately, this kind of ambulance chasing in its most grotesque form, which is that for a while, if you had successfully sued for no-fault benefits, the lawyer could take around 30% of what had been won in court. And so if you win somebody $100K for the rest of their life, you're pocketing $30K. That's a big incentive for lawyers to go find those families, because oftentimes those accidents would happen when folks were teenagers, right? And so there's a long lifetime trajectory in which you can make money off of that lawsuit. And for us, it didn't make sense. One, why legal fees should have been why that benefit should have been allowed to go for as long as they had, and two, why there wasn't some more robust effort against fraud.
Okay, thanks. There's a lot of great questions here, so I'm going to apologize right from the start that I'm probably not going to get to all of them. There's several that are similar, so I'll try to join some of them together. There's a couple here asking, Josh, if you know of the average $5,000 premium in Detroit. Mm-hmm. What portion of that is for the PIP coverage? What portion of that is for other type of coverage, property damage, body injury, liability, those sorts of things? Do you have a breakdown of that?
Sure. Not for Detroit, but here's the trends we know for the state. In 1970s, PIP used to account for about 7% of your overall premium. It escalated up in the early 2000s to being more than 40%. So a significant chunk of your bill is not going to cover what most of us get into car accidents ask our insurance company to do, right? When I got in an accident, it was my rear door. What I was paying for was this crazy, lucrative health insurance that I was double paying for. In Detroit, we have to put their rates in context. Once rates get so expensive, people start to drop out the market. And in insurance, what you need is a big pool. If I wanted to insure, for example, the car insurance of this room, I might ask myself, all right, what's the risk profile of the drivers here? But if I wanted to insure the entire hotel, it'd be a little easier for me. I could reduce costs because we're spreading the risk across more people. In Detroit, 60% of folks drove without insurance. And so you add PIP on top of what was essentially a price spiral, where the more people dropped out, the more it became costlier to insure in the city. And that's, I think, where you got that $5,000 rate.
There's a couple of questions here related to the eliminating the use of someone's zip code in setting premium rates. And then there's this issue that I've seen written about that insurers will still be able to define territories. Mm-hmm. So can you explain what that is and if you think that will still be a problem? Will it have a undue influence on Detroiters, or what's your expectation there?
Well, the first is I think insurance companies could show some leadership and actually push forward a justification for what they think are the relevant territories. I think there's been little communication on their part about what they think would be best for them. And the question I would ask them is, I'm engaged in the business of prediction as well. I know what it is to sort of try to predict an auto insurance claim. We do it in our context, which is, why do you need to use territory and not maybe traffic accident, road quality, other things about that area that could actually predict a rate? But as of the legislation, my frank assessment was that it was too vague for me to make an honest claim. It just says territories and that regulators will decide what that looks like. It could be a county or it could be your block, right? And so depending upon which direction they go, this will allow insurers to either carve out a knife and make areas where premiums might be more expensive or not, or use a surgical scalpel. Now, why does that matter? Because your neighborhood is correlated with the history of how it got there, right? Your neighborhood and the people that are there aren't by accident. There are some neighborhoods in this state that have big Dutch populations. And so you're essentially proxying.
Very good neighborhoods.
Very good neighborhoods. Big Dutch populations, or in Detroit. Detroit's an 80% black city, and it's not an 80% black city by accident. And so what we risk when we make these finite neighborhood decisions is actually charging people more, not for the driving risk, but just for the neighborhood profile of that particular area. And what amounts to redlining in some areas. And so what I would tell regulators is, let's work with the insurance companies, right? Let's be leaders on this issue. Let's have an auto insurance system that's both the most competitive, the most profitable, but that doesn't make people feel like they're being punished because of where they grew up. Nobody's life should be determined by the zip code you grew up in. That's why we needed to get rid of zip code. And nobody's rates should be determined by the geography that you live in. It's got nothing to do with your driving ability. And so for us, it's an area where there needs to be continual monitoring, and where I'd love to see insurance companies come hand in hand with the universities, the wonderful universities across the state, and maybe team up and do some research about what's a good balance here. Let's find a reasonable balance that makes people feel secure and like they're not being targeted, along with making sure that we have a competitive market. We need competitive, profitable companies. That's the way you get lower rates. But I don't think territories is what they need to be profitable. And here's why I know. There's many companies that don't actually use territories at all. You can call. There are companies that don't use geography in their rate determination setting that are extremely popular, extremely competitive, and extremely profitable. And so this varies by company to company. I think this is something that they're just working on reevaluating.
I know that you've looked at this from a even broader perspective than Michigan, looking at it nationally and testifying in Congress and things like that. Are there differences, or do you see the same kind of dynamic in other states? Are auto insurance premiums much higher, significantly higher in urban, more low-income kinds of areas in other states as well?
It depends state by state. In places like California that have reformed the use of non-driving factors, they used to have, nationally there's around a 40% gap between what the lowest income folks pay and higher income folks pay. In LA, which is a city that's crazy to drive in, right? That gap is only 6 to 9%. And it's partially due to regulations that they put in place to equalize the playing field between low and income drivers throughout the state. In states where that regulation doesn't exist, what you see is that even in states that are more affordable, let's take an Iowa, which has really cheap rates, it's still really expensive, for example, if you have a low credit score. It can be more expensive to be a driver with a low credit score than a driver that has a DUI on your record in most states throughout the country, which to me, when I'm thinking about risk, I would perhaps put a DUI driver at a higher risk than a low credit score driver, because why do folks have low credit scores? Oftentimes, it was some kind of emergency, right? You got in a healthcare scare, you had to pay for prescription drugs, your price of insulin went up, so you upcharge your credit card. To me, that doesn't seem like a good rating for determining your insurance premium. And so that's the variation we still see, even in states that are otherwise affordable.
One of the other concerns that we've heard as a result of the reform that was passed relates to how much of the costs that are currently paid for by auto insurance, the medical coverage, how much of that is going to be moved off onto other insurers, and then what will be the impact of that? Are we just kind of shifting the costs over to Medicaid, Medicare, or to private insurers, and then are federal taxes going to go up as a result, or all our health insurance premiums going to go up as a result? Can you weigh in on that a little bit?
Sure. I know that our House fiscal and Senate fiscal agencies have said that they don't know how many people will switch over. The truth of the matter is it's likely that some of these costs will shift, but that's a good thing. Here's why. You can't put all of these costs in one basket. We put all these costs in the auto insurance basket for so long, and the end effect of it was that auto insurance was completely unaffordable. Spreading that cost around will actually make rates more affordable in the long term, because hospitals have the expertise to actually manage hospital claims. Insurers have the expertise of working with hospitals to make those rates effective. The effect on Medicaid, I think, is interesting. It's also important to notice that even as the Healthy Michigan program goes forward, that the federal government pays 90% of those costs. And so I think the question we have to pose to Michiganders, and that we've kind of done in our own policy research, is what's an efficient way to put these costs across the system so that costs are lower overall instead of pushing them on the auto insurance system? And for me, that shift is sensible. It makes sense to me that if I buy health insurance, I want to pay when I have a health insurance claim via my health insurance. I don't want to double pay both health care that I never end up utilizing for car accidents.
The other thing I can add there too is it's been possible for people to get what's called coordinated coverage with their auto insurance, which is where you basically say if you're injured in an auto accident, you're first going to charge your health insurance, your health insurer, for the services that you receive, and then if that's not possible or that runs out, then you go to your PIP coverage, and that allows people to reduce their premium. But to the extent that many people are doing that right now, it really won't change much on the cost side for private insurers, because they're already kind of the first one to be billed for people with coordinated coverage. So there's a couple questions here dealing with concerns about how insurers are going to price their premiums now if they are restricted with these factors. Do you know what other things they will use? Will it be, will they still be able to set sort of efficient premium rates, or are there going to be potential negative externalities of reducing the data that insurers can use to set these premiums?
Sure. They'll adopt what's closer to a system in California, Hawaii, and Massachusetts. So in California, Hawaii, and Massachusetts, there is more restriction of rating factors. And what you see is what they end up using is just more of your driving-related factors. Miles driven, type of car, how far you are from your home to your work, age. For example, if you have a young driver, you'll still likely pay more. And those are pretty good at predicting the risk that you'll make a claim. And in those states, they actually have very competitive systems. I think they have more insurance companies actually than in Michigan. And so that experience of reform, longstanding reform, to me shows that the significant curtailment of non-driving factors does not have a negative effect on competition, and it actually might make insurance cheaper in this way. When you make insurance more affordable for the folks who need it more, they're actually going to get insurance, and we're going to increase the pool of folks who are actually buying insurance. The more people buying insurance, the cheaper insurance gets. And that's the mantra I think policymakers need to remember. I want to see that 20% of Michigander rate go down, and I think non-driving factors will play a role in getting it there.
There was a bill introduced earlier this year that would have totally eliminated Michigan's no-fault system and replaced it with what is more commonly used throughout the United States, which is just a tort-based system. Only 12 total states in the U.S. have a no-fault system like Michigan does. What are your thoughts on that? Obviously, we didn't follow through with that, and that wasn't the kind of change that happened. We're going to maintain a no-fault style system. But would you have liked to see that rather than the kinds of reforms that they did through Senate Bill 1?
I'm agnostic, and here's why. What I ask policymakers is, what's your goal? If you want the cheapest insurance, you probably would go to a tort reform model. That's the model in places like Iowa, more deregulated. In Michigan, it seems that there was a consensus that folks wanted some compromise. They wanted to compromise between the price of insurance and the benefits of what you get, and that looks like what we got. So I think Michigan voters and Michigan policymakers have sort of said that we want to go for a system that's cheaper, but they didn't go all the way. And so what I predict is in the next 10 years, we're going to have a debate about whether or not to go all the way to tort, because that's a debate that's happening in Florida. That's a debate that's happening in other states that are no fault. And that's going to be ultimately a decision to the voters about what they want to be covered by their auto insurance. The more benefits you want, the pricier the insurance is going to be. We moved in the direction of affordability, but we haven't gotten rid of PIP. And because we're paying for some PIP, that's going to increase your costs because the insurance companies need to account for that.
Another question here, kind of diving deeper on the high costs in Detroit. Do you have a sense for how much of the high cost that Detroiters pay is a result of the previous unlimited PIP coverage that people had to get versus or what's the ratio of the factors, the non-driving factors, and especially thinking about how this compares with other cities. Cleveland, very similar, as you pointed out in the presentation, similar demographically, but has much less insurance costs. So can you weigh in on that a little bit?
Sure. In Detroit, the big factor was PIP, just no doubt. I mean, Duggan initially attempted to do de-insurance because the city was so desperate to have some other insurance option. And the actuarial analysis, they show that the big part of making insurance so difficult in Detroit was just the personal injury protection claims. Why? Just more people, right? Big city, more people. And in that city, a lot of folks were on public forms of insurance. And so there wasn't as much pushing that cost onto private insurers. And so a lot more of that cost was put onto the auto insurers. Instead, the way in which non-driving factors configure is not that they necessarily lead to big jumps in rates overall, but that they change those margins between different drivers. And so even in Ohio, somebody with a low credit score is going to pay a lot of money, but they're going to pay less overall because they're not also paying for PIP. And in Detroit, it just so happens that the city has some of the highest concentration of either no credit score or low credit score individuals. A large part of that is due to access to financial institutions. And so you had this interaction. Big PIP claims, low credit scores throughout the city, and it just became what was the nasty mess that it ended up becoming.
We have time for just one more question. There's been talk recently and some legislative action actually making tweaks to the bill that was just signed last week. So in your analysis of the bill, I wonder, are there concerns that you have about what was passed? Are there technical tweaks that still need to happen to make sure that what the legislature and Governor Whitmer intended actually is implemented well and produces the kinds of results that we're hoping for?
Yeah. The bill makes a lot of promises. and it puts a lot of work on the part of regulatory agencies. I would make sure, or my advice would be make sure you're fully staffed and equipped to actually do what the bill wants. And this sounds simple, right? That we would have the adequate staffing to make sure that we can implement these policies. But when Governor Whitmer ordered an audit of the Michigan Catastrophic Claims Association, they found that they had one actuary and that they were a part-time contractor. This huge catastrophic claims association that was managing your money year after year had a part-time contractor as their actuary. That's not enough. We need to make sure that the regulatory agencies are properly staffed so that they can work with insurance companies, because it helps the insurance companies to have somebody who can answer the phone, to have somebody who can walk through their concerns. They're an equal partner in making sure that we're affordable. And so that's a part of the bill that I think is going to be up to legislators to have some courage and say, yes, it's unpopular to make sure that there are jobs in government. Nobody likes that, right? But you need to have somebody to do the job, because the people who benefit from doing that job is all of us, in the form of making sure we have an auto insurance system that works and an auto insurance system that's not abused. The second piece of it is we need to think through this territorial rate setting piece. I think there should be more lively discussion and more transparency. And that the third piece is actually, I would like to see the state of Michigan actually issue public reports on the state of auto insurance. I want them to release reports that show zip code by, or rates by zip code, that show rates by different demographic groups, and that does an equity report looking to see whether or not our rural folks are being impacted, our seniors are being impacted, and whether or not disadvantaged groups across the state are being impacted disproportionately, just as a form of accountability. If we're unwilling to put a transparent public report in a year after reform showing how we've done, then we're going to be in a really bad place. Everybody has to come with the same data and facts, and the state is the most equipped to do that. And as the University of Michigan and the public universities, I'm sure, would be happy to work with them to analyze that data and make sure that we're getting it in the hands of consumers so that when they go shopping for auto insurance, they can say, yes, my rates actually decreased because of this reform.
Very good. Thank you, Josh. And join me in thanking Josh for his presentation today. That's all the time we have for today. We'll have another Issues and Ideas Forum next week on June 12th, same time, probably the same room. So we hope to see you then, and hope you have a great rest of your day. Thanks for coming.